let's first get in Sanjay Mathur, MD and Head of Economic Research at RBS Singapore. He joins us right now live. Good having you, Sanjay. Thanks so much for joining in. Well,
Morning.
it's not a surprise, but because we've been talking about it, Japan is out there giving stimulus. The European Central Bank has been talking about this. They've finally given a proper hint at a stimulus as well, and the world markets seem to be rejoicing.
Yes, I think that, so we obviously had a fairly predictable statement from the ECB yesterday that they stand ready and they would be reassessing the global growth conditions in December. I think it's quite likely that the BOJ, they are unlikely to move at this meeting, but they would drop enough hints that they're willing to go through with another bout of easing. So technically speaking, and also keeping in mind that expectations of Fed tightening are getting pushed out, there does seem to be sort of a greater synchronization of easy monetary policies in the G3 world. So that, I think, is certainly a positive. Now, against that, we also need to view and keep in mind what is happening to broader emerging markets. Now, to some extent, there will be a relief rally, but how quickly it gets translated into growth is a question mark. And on top of that, we have developments in China, which are calling or which sort of seem to suggest that there is a fairly strong structural transformation going on in that economy. Growth is slowing in China, and we have a situation where China is moving up the value-added chain. So each of these issues have to be kept in mind and balanced against each other.
So would India stand to benefit because there is a wave of this, global uptick that we are seeing in equity markets, and while we were off for a day's break, the global markets have done really, really well. Do you think India will also benefit from this wave of buying that we're seeing across asset classes, at least currencies as well as equities?
Yes, I do think that in the short term we will benefit. Thereafter, we need to see the strength of the recovery, and which has improved, and the economy seems to have bottomed out. But at the same time, there is no clear signal that the rebound is a strong one. And in that regard, we've had corporate results which seem to be positive, but positive at the profit level. When you look at the top line numbers, they haven't really moved very much, particularly in the domestic side of the economy.
Sanjay, now equities as an asset class, they normally do well when there is strong underlying local and global growth. Currently, there is a big question mark about global growth, both for emerging markets and for developed markets. Even though growth is a concern, most of the major markets, at least the big ones, which is Dow, S&P, these markets are sitting at a record high.
No, I think they are, yes, they are sitting at a record high. And I think they do get periodic stimulus from, what the central banks are saying. That said, I don't think this can go on for a long period of time. We also need to understand that monetary policy per se is very good for asset markets, but at some stage they do catch up with the growth dynamics of an economy. And in that context, we also need to recognize that monetary policy is already accommodative. So the incremental impact of monetary easing gets limited as we go down the line.
Sanjay, you talked about India only benefiting in the short run when it comes to this, global uptick that we're seeing in equities. What would the FII community watch out for cues when it comes to India? Would it be earnings growth? Would it be, the government stepping on the reform process? Or would it be something more political like the state elections in Bihar, which would be imperative for a BJP victory that the street is going to look out for?
Well, I think they will look for all three of them, right? The growth dynamics, the reforms process, and the political situation. Now, the last two of these, the political situation and the reforms process, in my view, are very intricately tied to each other. That should the BJP do well, I think the anticipation would be that reforms can be accelerated. So far, they've progressed at a fairly dismal pace. So I think that the two are quite tightly related to each other. And FIIs are looking at all three variables at this point in time.
Sanjay, frankly, I'm delighted with what foreign investors have done on the FDI front, on the private equity front, whereas on a daily basis we track the equity flows or the FI equity flows with a magnifying glass. The real FI activity is happening in the PE space and in the debt market space.
Yes, I think that the liberalization of policy in terms of increasing the ceiling, etc., has obviously helped a lot. Now, these are all particularly carry trade investors who are just seeking sort of benefits from the interest rate sort of arbitrage related sort of flows. So that's been positive. But again, I think the question really comes back to, and it will come down to this, that is this all going to translate into growth or not? And so far, the record has been very mixed. And I do not foresee this is going to change very much given the excess capacity in the industrial sector, the state of the banking, asset quality in the banks, and the fact that so far we've progressed on the reforms at a very slow pace. So each of these issues have to be taken into account rather than simply focus on what the global liquidity dynamics are.
Right.
Okay. Sanjay, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us that perspective.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.